Bank reconciliation is just a process, and this is a process to make sure that cash balance on the company's books matches the corresponding amount on its bank statement. So having a bank account at the end of every month or the beginning of the month, your bank will send you a statement. And in today's world, you can just look it up on your online banking. Okay. So usually the amount that the bank will show on your account would be different from what you actually know. Okay. For instance, if you use your credit card to buy something, it takes a few days for it to go through. Okay, so if I have $500 in my account and I've spent $20 at the end of the month, okay, and the bank sent me a statement that I have $500, I have to reconcile with the bank, okay, and correct them and make sure I only have $480 there because I have spent $20. That is bank reconciliation to make sure the amount you have on your books reflect or matches with the amount that is under the bank. On the other hand, the bank could also receive a deposit that you don't know and you have to correct it on your books. But before we go on with this exercise we have here, I want you to give you tips that you have to remember when doing bank reconciliation. First, you have to know that checks are not in chronological order. Because if you sign a check for me today and you sign a check for someone else in 3 days' time, the other person may cash in the check before I did. Okay, it may take me as long as I can to go to the bank to cash it out, but the bank will only record it as it gets cashed out. So if my bank check account is check number 5 and the other person is check number 7, you will see on the bank statement the number 7 before the number 5 because he cashed in first before I did. Don't worry about void. When it says it's void, avoid it. Don't worry about that. That means we didn't do anything with it. Okay, nothing happens to it. The company is more likely to make a deposit error than the bank. Okay, so the money that is deposited into your account, if there's an error, the company or you are more likely to make the error than the bank. So remember that. And when you are doing journal entry for bank reconciliation, remember that you only do the changes on the company's side. On your side, you don't do anything on the changes that happened on the bank side. Okay. Remember, bank reconciliation is adjustment. Okay, it's an adjusting entry. Money can be put into your account without you knowing. That is, money can be deposited into your account, but money cannot be withdrawn from your account without you knowing. Because a random guy cannot just show up at the bank and says, I want to withdraw money from this person's account. But if he or she is a good Samaritan and want to deposit money into your account, the bank will take it. But the bank will not withdraw money from your account without the person having a check or having a proof. And that means you have a copy of the check. So you need to remember these tips. Okay. Now let's go back to the exercise that we are about to do. Okay. So you notice here that we have balance on the bank. Okay, so this is the balance of the bank and this is the balance on the company's records. So when you talk about records, sometimes you may see company's books is the same. So record and books are the same. Okay, but in our books we have this amount, and in the company's in the bank's book, the bank has this amount. Okay, so which one is right? So we are going to reconcile this to make sure we agree. Okay, because make sure the two are the same. Matches means the same. Okay, the two are the same. Good. Now, so remember, these are adjusting entry. We are going to make adjustment. Okay, so that makes this number, these figures here, that makes them unadjusted. Okay, if you are going to make adjustment, then these figures right here, these two figures are unadjusted balance. Okay, so that is what we know. That's what we're going to begin with. So let's go ahead and do that. So this is a statement. Okay, so you need to have a title of your statement. So we have the company's name, that Bradford Company, and bank reconciliation. I chose operating cash account because we have types of cash account. If you take intermediate accounting, you will realize that we even have an account that we don't touch, that we have to use it for in the future, okay? And you have to put the date here. We don't have any date here, that's why I don't have any date here. Okay, good. Now, what we need to do is we need to determine the bank's record and then the company's record. Okay, but because this amount is unadjusted, so we have unadjusted balance here. Okay, this is a simple way to do it. So you ask yourself, okay, what is the bank's record? How much does the bank have on their books? Okay, the bank's record is 17,400. So we put 17,400 here. That's unadjusted. And on the company side, we have 5,764. Okay, and notice that there are so many formats out there that you can use to do your bank reconciliation, but this is the simplest way. This is one of the simplest way that I know, and I learned from my instructor or my professor called Douglas McDougall. It's very smart. Okay, so you don't need to do anything complicated that will worry you. No, this is very simple and straightforward. So you have your unadjusted balance here, 17,400 and 5,764. Now we are going to reconcile them. Okay. So we have here, this says bank service charge 125. So the bank charged us $125. So they have already taken it out from our account. So we have to recognize it here. Okay. So we can put the bank service charge here. It doesn't, we don't make changes on the bank side, but we make changes on our side, because we have to reduce, we have to subtract it from our books. We don't know, they have just told us, so we have to subtract it from our books. So that is negative $125. Okay, and then it says, so we're done with this one. Now deposit in transit, okay? Deposit in transit means we have deposited money and the bank has not yet put it into our account, or the deposit is still in transit, it hasn't arrived at the bank yet. So we have to correct the bank, okay, and then correct them that, hey, we have $3,000 that is on the way, okay? So we have to correct it with the bank. So that is $3,000. And here it says note collected by bank with 360 interest, okay? So notice here, this 360 here is very important. It's important when you're doing your adjustment entry, when you're doing your journal entry, that's adjustment entry. So pay attention to it. Don't ignore this 360. So the bank collected 9360. So we don't have it in our book, so we have to add it to our books. Okay. So we have this, and how much was it? $9360. So we added. If it's increasing, it's positive. If decreasing, it's negative, as you always know. Okay. Now, what do we have here? Again, it's outstanding checks. Outstanding checks means we have written a check for someone, like you have written a check for me that should come out of your bank. Okay, it should come out of your account, but I haven't checked it yet, so it's outstanding. So remember, these two are opposite. Outstanding means it has to come out of your bank account. Okay, and deposit means it has to increase your cash account. So outstanding checks, we have to tell the bank, hey, we have written a check for someone, he hasn't cashed it yet, so just assume that it's gone, okay? So we will be on the same page. So negative 5,400, because it's reducing the money that you have at the bank, okay? So that's negative 5,400. Now we're going to find the adjusted one, okay? So we're going to sum up everything here and sum up everything on the company's books, okay? And they should give us the same amount. They should reconcile. So I have my total here. Press enter. And that is the bank side. Okay, let's do my books and see if everything will be the same. Okay, I have the same amount. Okay, so that is how I reconcile. So I know I have reconciled my books. Okay, so we have 15,000, the banks, and then 50,000 on my books. So we are okay. Okay, we are okay. No fight. Everything is okay. Everything is peaceful. Good. Now we are going to do the adjusting entries. For time's sake, I already have the journal entries templates already set up. Okay, so usually this adjusting entry happens at the end of the month. Okay, So this, in this case, we don't have any date. So I'm just going to put here 31st, okay, 31. Okay, so remember I told you, you only do adjustments on the company's side. You don't do anything on the bank side. You only do adjustment entry for your company. Okay, so what happens here? We paid charges of 12500. So this is an expense. Bank service charge is an expense. Okay, so expenses debit. Okay, and then cash is decreasing. So our expenses is increasing and cash is decreasing. So we have bank service charge, and then we will reference that 125. Okay, you put negative here because you cannot have negative in your journal entries. Okay, so in your journal entries, you always have to have positive. So 125 on the left, 125 on the right, balances. Okay. Then the next one is this. Okay, we have received note, but pay attention to this. That's why I told you to pay attention to the $360. The note receivable plus 360 is what we have. We have increase in our cash. So automatically we know if we have a T account, our cash is increasing by 9360. Okay, but interest revenue, we have earned interest on the note receivable. So our note receivable was not 9360. Okay, note receivable was the difference between 9360 and then the 360. So that means our note receivable, someone was owing us how much? Probably 9,000. Okay, and then we have an interest revenue of 360. Okay, so that's how your journal entry will be. You don't put anything or everything in your note receivable because you have an interest. So you have to separate them. That's why I ask you to pay attention to that. So that is what we are going to do here. So we have our cash increasing this amount, okay? But we have an interest revenue of 360. So you see what I did? I have my interest revenue here. That means what is my note receivable? The note receivable was the cash minus the difference of, so I mean my note receivable was 9,000 and interest revenue was 360 because when you issue note comes with interest. Account receivable does not have interest, but note receivable always should have an interest. It doesn't have an interest, not a note receivable. So keep in mind with this. Okay, so are we done with that one? Let's do another one that is more complicated than this one. Okay, this one was just straightforward. Let's do a complicated one. Okay, so what we have here, you can see everything is complicated here. So we have this Oneida company, okay, deposit cash and blah, blah, blah. We're not gonna focus on that, but let's just focus on the numbers, okay? You can pause it and read the solution, okay? And read the problem. Okay. Anyway, as of June 30th, so the balance as of June is this, and then cash balance, okay, but as of June, so this is the beginning account, okay? So the bank started with this, okay? And then the cash received, and then the bank deposited this amount. Okay, so you want to know how much did we cash out today? Okay, good. But let's go through and see. So all these are checks. Okay, and then this is the bank statement. So usually this is how bank statement come. Okay, this is the bank statement. They have all the checks and everything that happens. So they have recognized all these ones that mean they came through, and these are all the deposits. So deposit here and then checks that are going out here. Okay, good. Now let's begin. To begin, we need to find our unadjusted, okay, unadjusted balance, as we did here. But this one is not straightforward, okay? So, but I will begin by recognizing my company, what company it is. That's Oneida Future Company, and this is a reconciliation at the June 30th. Okay, good. My unadjusted trial balance says, okay, I started with this amount as of June 1st. Okay, so I'll just put that amount there, 9317. That's how much I started with. Okay, it says 0.40. Okay, so I started with 9317.40, and deposit increases my account, my cash account, but withdrawal or checks decreases them. Okay, So I made a deposit. So let's look here. A deposit of 9524.16. So we have 9524.16. Okay, so this amount, that's cash deposit as of June. So those are all the deposit, the cash receipt that I received. Okay. And now let's look for, did we make any checks? Yes, all these are checks we made, and this is the total amount. If you were not given the total amount, you would have had to add them up, but this is the total amount. So that one would decrease it. Okay, so we have 359.66. Okay, so let's sum them up. Okay, so that means I should have 10. So this is my beginning, right? Beginning here. Okay, this is my beginning. This is my deposit, that's increasing. And then checks decrease. Checks decreases, okay? And this is my unadjusted balance. Okay, so that's my unadjusted balance. This is what I have. Okay, this is what it should show in my bank account until I do any reconciliation. Okay. So I'm gonna reveal this. So I have here, this is the bank records, and this is the company's books. Okay. So in my books, how much do I have? I have this in my book, so I'll reference it. Okay. So that's how much I have in my books. But what about the bank? How much does the bank say they have on my account? So I go and look at the bank statement. Okay. So the bank statement says my new balance is this. Okay, so I'll move this here so it will be easy. So we can see it side by side. Okay, so the banks, on the bank statement, the bank says my new balance is 13494.60. Okay, so I'll put 1349. Wait, I can't see anymore. 494.60. Okay, 13494.60. Okay, this is these two are huge difference. Okay, so we have to make sure they match with each other, these two accounts. Okay. That is what will compel us to go through our statements and also what we have in the books to compare them and reconcile them. Okay. So now, what you need to do, okay, I will recommend that you start with your checks. You compare your checks to see if it appears on the bank statement. If it does, good. Okay. But good doesn't end. If it does, you check the amount. Is it the same amount to see if there was an error or a mistake? Okay. If it doesn't, then you record it on the bank account. If it's a check, you subtract it from the bank. If it is a deposit, you add it to the bank. Okay. So deposit in transit, you add it to the bank. So you ask yourself who collected the money or who did it and who doesn't know about it. If it's a check, obviously you did it and the bank doesn't know. So you subtract it from the banks. If it's a deposit, you did it, the bank doesn't know. You add it to the bank. Okay. If the bank collected the money, okay, here we will go through what the bank collected. We see here miscellaneous. So someone deposited the money into account. The bank collected it. So you have to add it to yours. Okay. Now let's move on before I talk too much. We have, okay, notice here that we are doing a reconciliation for June, but we have here a statement that says May 31st. So every month you do a bank reconciliation. And then when you do another bank reconciliation, you have to go back to check to see if everything you did has gone through. Okay, you have to go back and check. So going back to check on May, we have to double check with the bank to see if everything we cashed out or check we sign out appeared on the bank statement. If it doesn't, then we have to correct the bank. So we'll go one by one. Let's take check number 731. So we wrote this check in, what do you call it? In May, okay? We wrote them in May. So we have to check with the bank to see if it appears there. So we have our May check number 731. Does it appear there? Yes, it appears there. Is the amount the same? Yes, 162.15. That's the same amount. Okay, so check number 736. Does it appear here? Let's look for 736. Where is it? Okay, it appears here. Okay, and that's the same amount, 345.95. Yep, it appears here. Okay, now check number 738. Does it appear here? Okay, I don't see it here, so it doesn't. So you have to correct the bank. Okay, subtract it from the bank. So we'll have check number 738. You just write the check number there, outstanding check number 738. And how much is it? It's 251.40. So you have to subtract it from the bank, 251.40. Okay, so that has to be negative. Okay. 251.40, which is a negative. Okay. Now check number 739. Is it there? Let's look for it right here. Okay, 60.55. That is 60.55. So that's correct. So we are done with what we call May. May, okay. Sometimes you may have deposit in transit, okay. You may also have to check with it, okay, compare with it to see what happened. Okay, great. Now we're done with May, so we're going to move on with June, okay. Now we know with May checks, only this guy hasn't checked it, okay. He doesn't have time and he doesn't care because he has so much money. He doesn't care whenever he goes to the bank. He doesn't have bills to pay, presumably. Okay. Now let's check number 740. Let's see if it's recognized in the bank account. Okay, so 740. Let's look for 740. It's right here. Okay. Let's move this here. Okay, so check number 740. Did I see it? Yeah, sorry. 237.50. 237.50. Yep. So you're done with that one. Okay, it's there. Okay. Check number 741. Let's look for check number 741. We have it here. Okay, how much is it? The bank says 495.15, and we have 495.15. Okay, check number 741. Okay, so we know that is the same. Okay, we don't have any problem. That's correct. Once we got rid of this, let's move this one here so we can compare it. Okay, we can see it side by side. Okay, now so check number 741, we're done with that. Okay, what about check number 742? Let's look for it right here. Okay, so 5001.90, 5001.90, that is correct. Reconcile. Okay, great. Check number 743. Let's look for check number 743 right here. Okay, 671.30. 671.30, that is reconciled. Great, perfect. Okay. Now let's look for check number 744. Okay, check number 744. Where is it? Yeah, right here. Okay, check number 744 is 506.88. We have 560.88. So there is a mistake. What happened? Book says we cashed out 560.88, but the bank says we cashed out 506.88. Remember what I told you earlier? The company is more likely to make a mistake than the bank. Okay, so we recorded more than we're supposed to. So we have to add it back to our cash account. We were supposed to record 506.88, but we recorded 560.88. So we have to record it back into our account. And how do we do that? Okay. That is, so this one is an error in check number 744. So we have to add it into our account. Okay. And to do that, we have to take the bank's 560.88, what we did here, 560.88. Remember, we are increasing it minus what the bank has. The bank has 506.88. Okay, so that increased our money of cash account of $54. Okay. Which one did we just do? Cash number, check number 744. Okay. Now let's go to 755 to see if it's there. 755. Let's look, 755. Okay, right here. Okay, how much is it? 272.75. Wait. Okay, I was looking up 75. Okay, 745. Let's look for 745 right here. 11.7.25. 11.7.25. So that is correct. We don't do anything. Check number 746. Okay. 746. Where is it? Okay, right here, 298.66, 298.60, that is correct. We don't do it. Once the amounts are correct, we don't do anything. Okay, this check is void. Remember what I told you at the beginning. Don't worry about void. Avoid it. Okay, so don't do anything with this one. Okay, now check number 748. Okay, what do we have? 748. Let's look for 74 right here. Okay, 450.90 and 748 is 450.9. That's correct. Okay, check number 749 right here. Okay, 640.13. 640.90. That's correct. Check number 750. Because 0750 276.77. 276.77. Okay, check number 751. 751 right here, 299.37, 299.37, correct. Check number 752. Let's look for 752. Okay, right here, okay. 537.01. 537.01, great. Check number 753. 753 right here, okay. 380.95. 380.1, that is correct. Okay. Check number 754. 754. Okay, right here, 449.75. 449. That's correct. Check number 755. Right here, okay. 272.75. 272.75. That's correct. Check number 756. Okay, let's look for 756. Okay, why is it? I saw this right here. Okay, think again, think again. Okay, so check number 756 is not here, apparently. Okay, good. So once it's not there, we have to subtract it from the bank, okay, because it's not there. Okay, good. So we would do check number 756. We subtract it from the bank. Okay, how much is check number 756? 756. 11,3.95. So we put 11,3.95. Okay, we have to take the bank. Hey, we have written a check for someone, he hasn't cashed it out, we subtract it from our account. Okay, so we don't think we have money. We don't have. It's not. It doesn't belong to us. Okay, now 56. Okay, let's go check number 757. Look for 775 right here. 407.95. 75740. That is correct. Okay, check number 758. Check number 758. Okay, I don't see it here. It's not here. Okay, so we have to tell the bank to, hey, we have another check that we haven't cashed it yet, please. Okay, how much is segment 259.60? So 259.60. Okay, so we told the bank that we have written a check for someone, he hasn't checked it, so do it for us. Okay, we don't want to think we have money. Okay, check number 759. That's for 759. Okay, right here. Okay, 901.50. 901.5, that's correct. Okay. How about check number 760? Okay, 760, 760, it's not here, okay? So now we're going to record 760, okay? How much is it? And that makes sense because that was at the end of the month, okay? So the bank hasn't, whoever got it hasn't cashed it out yet, okay? So we have to tell the bank to subtract it from our account. That is 486.39, okay? Good. So we're done with the checks, okay? Outstanding checks, okay? One down, three down with it. That's good. That fixed good. Okay, now we're going to do the deposit. Okay, once we're done with this, let's move this somewhere, okay? Because we're done with it. Okay, let's go and do the deposit. And we're going to do the same. We're going to compare them side by side with what the bank has. Okay, now, where do we start? Where do we start from? Okay, so we have this deposit. Okay, so let's look at the bank. So 690.25 is not here. That's probably in August. Okay, that is right here. Okay, so in August, they now recognize it here, 690.25. Okay, good. Now they have 1080.50. We have 1050 here, so we don't do anything. 854.17. We have it here, so we don't do anything. Okay. 854.17, that's right. Okay. And they have 840.50, and we have 845. So that's probably error on our part. Okay. So that is error on our part. So we recorded more money than we're supposed to. Okay. So we have to reduce it by that amount. Okay. So in order to do that, this is an error in deposit. So it has to come out of our money. We have to reduce it. We said we deposit it, we increased by 845, but according to the bank, it's only 840.50. So we have to decrease it by taking the bank 840 point, I believe it was 5.5 minus what we have, 845. Okay, so it's reducing cash by 4.50. Okay. Let's move this down. Okay, this is quite a lot of job. Okay, now we're done with this one. Okay, so here we have what 3,500. So it says miscellaneous. Okay, deposit miscellaneous. So someone put money into our account, or the bank collected money for us. So we have to recognize it in our books because it's not in our books. Okay, so how are we going to do that? We have 3,500. Okay, that increases our money. Okay. And then MS, someone also collected money, deposited money into account that is 21, okay, $210, okay? So we're going to do that. And you will be thinking, why did I not put them together? There's a reason I didn't do that. I could have put this together, but there's a reason, okay? And the reason is, I will ask the bank later, who paid this 35 and who paid this 210? So on my subsidiary ledger, I know which entry those accounts go, okay? So now we have 896.61. Okay, let's look. We have it here, 896.61. That's correct. Now we have 882.95. 882.95. That's correct here. Now we have 1606.74. 1607. Okay, that is a mistake. 1606.74. 1607.64. So who did the error? Likely we did the error. So we have to correct that. Okay. And so we recorded more than we're supposed to. So we have to subtract the difference. And when you look at this, you could tell, usually in accounting error, when this happens, is usually 90 cents or $90 or $900. So when you check the difference, you can tell that is a 90 cent difference. Yeah. So how are we going to do that? Okay. We are going to take the banks and subtract ours. Okay. So that will be the error that we have will be 1606.74. That's the bank. Okay, on the bank side, 1606.74, and subtract hours to get the difference. So that's 1607.64. That's right there. Okay, and the difference is 90 cents. Okay, usually those mistakes end up in 9999. Okay, good. Okay, so we have this taken care of, and we have 89.34. We have 87.34. That's right here. Okay, 87.34 right there. Okay, good. And then the bank. So this one is done, and we have to here. Okay. So you have to notice, pay attention to this. We only finished 89 up to here. Okay. We haven't done anything with this amount, so we'll come back to that. Okay. But on the bank side, the bank says we have NSF of 300. That means someone brought in a check, okay, deposit, and then there was insufficient fund, non-insufficient fund enough. Okay, it bounced. Because of that, that means we recorded it in our books that we have money. But now the bank says, no, it didn't go through. So you have to take it out from your account. Okay, we are going to reduce our account by $300. So NSF always reduces the company's books. Okay, now for SC means we have the definition service charge. So the bank charge us $40. And remember, service charge decreases our cash, okay, because they have taken money from our cash. That hurt, ouch. Okay, so we have to reduce that. Okay, so service charge was $40. That comes out of our account. Okay, Now we're done with this one on the bank side. Oof, that feels good. Great. Now that it feels good, let's see 942. Okay. So what we dealt with 942.71 right here. So this last one is called deposit in transit because the bank hasn't recognized it. So the bank hasn't increased our money. So we have to increase it for the bank. Okay, and how much is that one? We have to put it on the bank, say, hey, we have money there, please recognize it. 1517, so 1517.24. Okay, now good. Now that we're done with all these, we have to do what we call adjusted balance. So we add everything on the bank's record with, and then we add everything on the company's record, and then we have to have the same amount. Okay, they have to match. Okay. And this what we're going to do. I'm going to add everything here. Okay, so 13950. Make it bold so we will see nicely. And then we add everything. Oosh, I hope it works. Hey, I'm scared. Good, that works. Okay, they work. Okay, so that means we have reconciled our bank accounts. They are the same. Okay, they are the same. Zero, this minus this is zero. Reconcile. Okay, so we corrected the bank, they have this, and we corrected that way, so we have this. Okay, good. So we're done with our long reconciliation. Okay, now we are going to do what we call the journal entry for this. Okay, and I already have the template here, so we save time. Okay, so I'm gonna move this template up there and up, too far. Okay, good. So we have this template out there. Remember, with the adjustment entry, you only do the adjustment you have on your bank company's book. Okay, not the banks. You only do this one. Okay. So how do we begin it? Okay. This has a date, and I'll say the date is 30th June. That's it. Okay. But this 54, what is it for? Okay. This is positive, so it's increasing our cash automatically. But which account should we have a credit? Okay. This could mean so many different ways. We can assume that we bought inventory, okay, and we recorded too much amount on the inventory, so we have to reduce the inventory. It will also be that we paid on someone we are owing, and we paid too much, so we have to reduce it. So it depends on what the company paid that amount for. Okay, that check what the company paid. That's what I have here. It's up to you to choose. Okay, so we are putting that money back, and we are putting it back into our account payable or our inventory. Okay, it could even be an expense. This could even be an expense. Okay, and this is the only time. This is one of the only few times you can credit expense. What does that mean? That means maybe your executive traveled somewhere, okay, and came back and says, hey, this is the ticket for how much gas I bought, okay, and you wrote a check for the executive. The check, that becomes an expense. You recorded the expense, but the bank tells you, no, you recorded more than that, so you have to reduce your expense. So this portion could even be an expense. It is up to you, whatever you decided or you did with that money. Okay. Good. And then we have, what else do we have? Okay, 3,500. So we have this error. Let me put this here. I'll come back to that. Okay, the record. Okay, let me put this through here. Yes, sir. So we have this 4.50 here that we know that is decreasing our cash. Okay, that's definitely going to decrease our cash. But what is it decreasing? Okay, well, what is it going to increase then? Okay, let's assume we receive money from some, because this is a deposit. So someone paid us. Okay, once we receive the money, we reduce the account receivable. So when we realize that we reduce more than we're supposed to, we have to go back and increase it. Okay, so this is what the account will be. The account receivable will be that amount, and then we will have this amount over there. So cash is decreasing by this, and account receivable, we're putting it back. Okay, this is similar to what we call writing off a account receivable. And when you, if you have already studied it, we have direct write-off, and I'm not going to mention that, but I'm going to do that in my next video. Okay, I'm going to talk more about that. Okay, you can actually take the money, write off a debit account receivable, and then put it back again. Okay. Good. So we reduce it, and then we increase our account receivable once again. Let's move quickly to the next one. So the next one is 3,500. We know that is increasing our cash. Okay, increasing our cash, and then could decrease some account. That could be a account receivable as well. Okay, so our cash is increasing by 3,500, and then our account receivable is also decreasing by 3,500, because we are assuming here that someone owes us money and has paid it, so we have to decrease the account receivable. And I chose account receivable. Okay, you will think, why did I not choose note receivable? Okay, if it's a note receivable, it will have interest. Like I told you, note receivable has interest, and because this one the bank doesn't show any interest, that means it is what we call account receivable, because account receivable don't have interest almost all the time. So we have the next one, which is 2010. Okay, is it 2010? No, 3,500, and then we have 210,000. Oh, 210. Yeah, $210. Okay. So now, how do we do this? What is happening here? Okay, in accounting, you have to communicate with yourself a lot. What is happening here? Okay, so our cash is increasing by $210, and we have the same case as our previous one, account receivable. Okay, so we will do 210, but I'm going to reference it. Okay, so we have $210 at our entry. Okay, we move on to our next one. What is happening here? Here, our cash has to reduce because this is negative. Okay, if our cash is reducing, we could choose account receivable, just like we have here. Okay, so you can always choose account receivable if you don't know, and you will never go wrong, okay, unless you have been told what that check is for. Okay, so I put asterisk here. That means you could change it. Okay, it could be anything. It could be anything. Yes. Okay. So let's move on and do the next one. So we have 300 here. What is happening? That's NSF. Okay. NSF means someone that owes us money, gave us a check and the check was wrong. So we have to say, hey, you still owe us money. Okay. We wrote off our account receivable, and now we're going to put it back. Okay. So we're going to do NSF of $300. Okay. Remember, you cannot have negative in your entry. Okay. You're going to put back that $300. And what I think about this one could even be capital, okay? Could even be capital because, let's assume owner's equity. Owner decided to put money into the account. Okay, that's really an old, bad owner or stakeholder, and the check bounce. So you increase it by increasing capital on credit. And we're like, nope, you have to decrease your capital because the check bounced. Okay, let's move on to the last one before I board you. Okay, so we have the last one, which is 40. Okay, what it is? This is a service charge. Okay, and we know service charge is an expense, and then our cash is going down. Okay, so because it's negative over there, we're going to use negative to make it positive, and then we reference that. Okay, so we know we have here the same 410 09.40. Okay, so that is our bank reconciliation. This one is the same, everything reconciled, and this one too reconciled with what we have, the one on the bank's record. Okay, thank you for watching, but I have an assignment for you. Okay, look at this, pause the video and go through Okay, and try answering it. After answering it, if you have a question, please comment or ask your question in the comment section, and I will surely respond to you. Okay. There are so many ways of doing accounting, and whichever way you choose to do, keep practicing. And good luck on your test.